What's up everybody, CryptoVatsik here with another technical analysis video for you. Nothing of what you're about to see is considered financial advice, and they're just my opinions. As always, if you like this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel. Let's get right into it. Okay, today I'm going to be covering HBAR, otherwise known as Hedera Hashgraph. And this is going to be an update on the TA previously done on my video on HBAR over 2 months ago now. We're on the log chart on the daily time frame, and all the illustrations you see on the chart currently are from that previous video. And just to quickly recap what I had said, when we were trading right here at the time, I had marked out the green zone down here as that macro area of demand that I'd be interested in going long at. And really it stems from this macro range that I had marked out with the equilibrium here in this dashed line at around just under 4 cents. So at the time when we were trading right here, what I said was a short-term play would be a break of market structure on this previous swing high with your stop loss below these lows, targeting the bottom of the previous range up here in supply. But I had said this would be short term, and my expectation was that we would get a chance to buy in green. Now if we just flip back to the current chart, we'll see what happened. Now you'll notice we got that almost precisely. However, the key thing being, we never got that market structure break that I was hoping to see for a retest of previous resistance up here. So this short-term trade here was never triggered, on the basis that we never broke this swing high for that market structure break. We definitely saw attempts to break it with this wick here, another wick here, and then even a candle close temporarily above here. And then thereafter seeing weakness. So this entire range here just essentially being some bearish consolidation before breaking below the range and then retest as resistance, which led to a tap of green. And then my expectation was that we'd get some form of a bear market rally. So we came down, we dropped into green, tested a new area of demand, and then bounced for an over 100% move. So the other trigger that I was clearly identifying was a flip of the previous resistance consolidation level from this price action over here that we saw. And so I had said I'll quickly change my tune on a flip of this level, which ranges from about 5.5 cents to 6 cents roughly. So clearly we got that. The first trigger being here, this break of this previous high of this bearish consolidation. We made a fresh new high right here. We flipped it into support with a pretty harsh candle wick right here on Wednesday the 18th, where that resistance level really suppressed price back underneath it for a candle close. But ultimately what we got was on this next breaker candle was a flip of that level. And so that's where I said then this previous range that we were trading in for quite some time over here would come back into play. And my ultimate target at the time was a flip of that. You target the range EQ. So it's great to see the plan worked. However, as I always say, that is now all in hindsight, and it changes things now. So this is now considered support. So we'll go ahead and mark that out. So now it's not to say that price can't come down and test green again at some point in the near future. It's very possible, but we have to trade what's in front of us. And what I am seeing currently, based on that previous video, if I stick to my criteria, is a flip of macro support with acceptance above the level, and now consolidating under resistance being the range EQ from that prior range, as I said. So on a macro level, you could consider this a sweep of this prior high with a potential initial rejection and come back down to test the monthly open, which is at 0.064, and on a hold of that level, come back up to the EQ, ultimate target being the range high from these previous highs that we had back in May. If we're going to talk longer term bullishness, we need to see this macro support hold. That is my decision maker level at this point. If we're going to see a continued push, that must hold. What happened below here now is more or less irrelevant in my opinion, because from a super high time frame perspective, we had this macro range. We broke out to the downside to the prior range. Otherwise, maybe just a massive deviation below the range on a high time frame. And now we've broken back to the upside in that prior range. So that is what is now valid in my opinion. Now drilling a little bit more into the current price action that we are seeing, I've marked out our current bullish order block, which formed an area of consolidation right on the 200 exponential moving average with a break to the upside and upside retest of that bullish order block already. And as I said, the monthly open sitting right down here at 0.064. I'll just make that one solid. So for me, there's a couple ways of viewing this at the moment. The obvious scenario is you break this high and a break of this equilibrium. That's a continuation signal. We've had a couple swing failure patterns already, but ultimately just coming back down and retesting that bullish order block where the demand still lives. So potentially come Monday, we attempt to push to the upside, breaking these highs and the EQ, as I said, for a push higher towards the range high at just over 10 cents. That's something I'm considering for sure at the moment. However, it's not out of the question that we come back down and revisit the monthly open. So if this turns into an SFP, depending on the daily and weekly candle close at the moment, perhaps we get another opportunity to look at the monthly open. But on the basis of that happening, it would mean more or less that we've now lost that bullish order block in green. So if this is going to push higher, I would much prefer to see green hold. We are seeing some decent consolidation above that level on thick volume bars here. So perhaps positions are filling and preparing for the next leg to ultimately break that current resistance. Let's drill down to the 4-hour time frame now. Okay, so the trend is still valid. After we made our swing high, we then formed our range from our swing low, with the EQ being right somewhere in here, clearly as resistance multiple times until we were able to flip that level now into support. So perhaps for the weekend, we just get some more chop, otherwise consolidation underneath resistance above support for a potential Monday or Tuesday open break to the upside. Ultimately, with the key being consistent higher lows. So if you're going for a short-term scalp, you clearly want to see this trend hold, possible entry on a tag of the diagonal or on a tag of green and the diagonal, with your risk being below this low, which again, if you'll remember, is also the equilibrium of this current ranging channel that we've got from our swing high down to the swing low, the EQ sitting right in that sweet spot. Now the vice versa, if this just SFPs and we get weakness back down to green, then plan B is essentially looking at the monthly open sitting right here with the double bottom formation here and a reclaim of the EQ of the current range and then just targeting the highs for a couple short-term long scalps. Now, another thing I'll be watching is if we make our next dip down to this level where we get something like that, where this is our confirmed higher low in comparison to these higher lows, I'd be carefully watching a break of this higher low, meaning a short opportunity on a bearish retest back down to that monthly open. If we get this structure and signal, I'm hesitant to believe the monthly open will hold. If we visit it later into February, it would be a sign of weakness in my opinion. It was nice to see the quick 2 tests of it back here, but on a revisit of that monthly open, I would lean towards testing that decision maker level on a higher time frame, bigger picture scale, where the question then becomes if that's where we get our next macro leg up. If we don't hold this support, I think we get a much deeper correction. And honestly, I think that the lows are in question at that point. And truthfully, this leg that we've seen has not had its correction yet, but it doesn't mean that it has to correct down here. If we can continue to push higher, so say green holds, say the monthly open holds, and say we break EQ resistance that we're currently at, and we come up and test the highs, then on a macro scale, it would be completely healthy for our correction to come down to this decision maker level in the near future, where we get our next major leg up from that point here. But it would mean that I would like to see current resistance broken sooner than later. And it would mean I want to see this current trend continue all the while holding this bullish structure that we've got currently. So personally, I'm looking for reasons to long. I'm not as interested in shorts simply because the trend is still bullish and the classic saying, the trend is your friend. So trade with strength, trade into the trend, don't fight the trend, but do your best at not buying into resistance. Buy into support and sell at resistance. So like I said, there's just a couple different scenarios. If we get this structure, I think we go lower, break monthly open, I think we see the critical hold level, and on a break of the critical hold level, I think we see a much deeper correction. But all of that is to say, if we do not break this current resistance. So like I said, if we do get a pullback and sweep the lows, that is completely fine. You can get a long scenario here and either target the EQ or anticipating a break of the EQ, like I said, targeting the highs. So that's what I would like to see in the short term for this move to continue, meaning our larger correction later, in theory, should be at an elevated price, which means the probability of the bottom being in increases. But don't kid yourself, this will correct and it will leave late buyers underwater. So currently on a macro scale, if you're looking at this, there's no problem in taking short-term scalps up to resistance, but I've more or less put my long-term installments on hold until we see that macro correction. I don't really care if we push up to 10 cents or higher, because I know we're going to get that big picture correction, and that's where I'll be reactivating my long-term bag installments. Because if you're doing long-term bag installments laddering up here, we're more than halfway through this leg in my opinion. So say you ladder all the way up here, and then we get our macro correction back down to say this monthly open or down to this decision maker level, then all of a sudden we're down here and you've accumulated up here, leaving you either underwater or sidelined and you're not able to buy the dip over here. So that's just my strategy, whatever works for you. If it works, great, I'm happy for you. But to say that this is our consolidation range after a cycle bottom and this is the price action that's going to lead to all-time highs is just a bit short-sighted in my opinion. You know, you look, when you zoom in on the 4 hour, it looks like it's consolidating for quite some time, sure. And yes, you might get a push to the upside and all of a sudden your accumulation bags are up pretty good, but the market will humble you. And to say that this is your macro long-term cycle accumulation, it just doesn't jive with me. I mean, just zoom out for a second here and come back to the daily. You're telling me that this minor area of consolidation is what is essentially just going to lead to straight to all-time highs? I mean, sure, yeah, it's possible. I'm not going to say you're wrong. Absolutely, everything's on the table. But more likely what's to happen is we complete a major impulsive move off of our bottom, which even if this is our cycle bottom, this is the first impulsive move of the next cycle, meaning we need acceptance above the macro structure break from this structure we had back here and our correction of the first wave that would complete just wave 1 of a larger 5-wave structure. This is also the first time we are trading above the 200 EMA and the 100 EMA since arguably back in November 2021 on the daily time frame. So in my opinion, it's unlikely that the EMAs have balanced out with price already. We're essentially mean reverting back to that prior range here off a knee-jerk reaction V reversal bottom that will eventually balance out with the moving averages, if that makes sense. Because it's also very possible that this is our bear market rally, meaning the bear market's not over yet, and we came up into resistance, we get rejected, and then we slow bleed out back down. So I guess my point is just be careful up here and be very patient with it. It's easy to say, oh, price can only come down if Bitcoin crashes back down to 17, 15K. It's like, why can't that happen? You're essentially saying that you know Bitcoin has bottomed out for sure, which nobody can say with certainty. So if Bitcoin does come back down to the lows, alts are going to pay the price, as I say. So just stay frosty, determine your strategy if you're looking for scalps or if you're interested in those long-term bags, and just play it safe. Because ultimately, even if I am bullish long-term on something, I'd much prefer to get another opportunity anyways to accumulate in lower prices. So it's fine to be short-term bearish, but long-term bullish. It's a difference in your time preference, with low time preference being those patient investors that are thinking 3, 4, 5 years out versus a high time preference trader or investor that needs it to go to all-time highs now so they can get rich. You'll more than likely end up chopping yourself up, risking too much of your stack, or God forbid, playing with leverage. So just zoom out, understand where we are, and just have that plan identified for yourself. Anyways, guys, thank you so much for joining. I really hope this video helped you in some way. And if you were able to take something away from it, that's awesome. Please give the video a like and don't forget to subscribe. You can also follow me on Twitter at CryptoVatsik for frequent updates. And as always, we'll see you on the next one. Thanks for tuning in. Cheers.